Hello and welcome back to ASX Market Watch. Thank you very much for joining me. And this week I am looking at 5 individual charts, but I'll try and be very quick because I know you are all busy and I do value your time. I'll try and be very quick but get to the meat of the situation as well. And this week I'm looking at ASX Top 200, the index here, also the Dow Jones and the FTSE, because those two are looking very similar at the moment. And then 2 individual charts which I've actually taken entry signals in my own personal trading at the moment. And I just want to show you the reasons why I've actually taken those trades, and maybe you can actually glean a little information from that, or just look at how someone else actually trades the market. It's always good to have a bit more information, I think, personally. So let's get started. This is the ASX Top 200, and the first thing I do when I look at any chart is draw in the longer term trend line support and resistance. In this case, what we've got is our longer term downtrend line, which was crossed in July 2009, and that's given us our recent bull run up until January 2010, when only just recently it has crossed below the uptrend line here. So on January 22nd, that's when it crossed past it, and that's given us our recent correction. And really, we're at the forefront of that correction. We were sort of calling it before a lot of people were. Always a good place to be, at the forefront of where the market action is heading. And now, as last week, what I was saying is we were expecting a bounce to happen. Now, if we look at a weekly chart on the ASX Top 200, this is a weekly chart here. As you can see, this week we have had our bounce. So this is our up bar. It's got a higher high and a higher low, so that gives us an up bar. Now, this really paves the way for 2 different scenarios on the ASX Top 200. At the moment, I would still deem us to be in correction mode. Now, whether that correction becomes another bull market or a full-on bear market, this is the signal that I would be looking for personally. So, for a bear market to occur, I would be looking for a Dow theory exit. Now, part of Dow's theory was higher peaks and higher troughs for a bull market and lower peaks and lower troughs for a bear market. So, if we were to be looking out for a bear market in this situation, we'd be looking for this higher peak here, which is just forming now. Actually, well, it's still in the process of happening, actually. And if the market were to come back down and trade below 4,467 right here, that would be a close below that would be a confirmed bear market according to Dow theory. So that's what I'll be looking for in that situation. Now, for a bullish situation, this one's a little bit more tricky because we don't really have a defined down trend line as yet. So what do we do if we don't have a downtrend line for the market to cross and give us a signal? Well, this is where I use something that's to my own personal trading. I've been using it a little while and found it quite successful. I use a 45-degree line from the previous peak down into the current market action. Now, with that line, a lot of people would use what's called a Gann fan or a geometric fan. I don't personally use those. I'm not very good at them personally. I know some people who are, and they work fantastically for them. I prefer to do it by hand and by eye. And in all honesty, the market is a bit of a skin bag of emotion anyway. It's not an exact science, as you'll find. And so, drawing this by hand, it usually can come off a little bit better than drawing an exact line like the Gann fan 45-degree angle. So anyway, moving on. If we didn't have our downtrend line, which we don't, that's the next point of resistance that I would personally be looking for, is the 45-degree angle downwards. Now, looking at that, we could expect to have resistance at around the 4,750 level to 4,800. And really, the market hasn't reached there yet, so if it was to go above that, that would give us a bit more of an indication that the market would be turning bullish again. Currently, I still see the ASX Top 200 in correction mode. Now, next point of interest is the Dow Jones. And the Dow Jones is another tricky one at the moment. Everyone seems to be consolidating a little bit. What we've had on the Dow Jones for a while is the longer-term downtrend line, and as you can see, it found resistance at that downtrend line in December 2009. It traded above it for a little while. If I just enlarge that chart for you, here we go. This is a daily chart. It traded above it for a little while in January, and then it came back below it, and now it's above it again. So really what I expect for the Dow is it's actually just flirting with this longer-term downtrend line, and prices will tend to be volatile at market tops and market bottoms. We are seeing an increase in volatility at the moment, so I mean, you could speculate that a market top was forming, but at the same time, I still feel that it's just going to still sort of snake around this trend line for a little bit, and whichever way it breaks out from this little consolidation pattern here is probably the path that it's going to take from then on in. At the moment, it's above that trend line, so you could consider the Dow Jones to be more bullish than the ASX Top 200, for example. Yeah, very, very simple. Above that trend line would be bullish, below it would be bearish, currently at the moment, on a short-term signal. The FTSE, the reason why I've included that one, just looking at this chart, is it's very similar to the Dow Jones. The only thing that's differentiated the FTSE from the Dow Jones, as you can see, it's got that longer-term downtrend line as well, which it's really just flirting with at the moment, around 5,500 to 5,000 level on the FTSE. The only good thing about the FTSE is that it actually stayed above its longer-term uptrend line. Actually, I'll just quickly check if the Dow Jones has as well. No, the Dow Jones is still crossed below it, if we look at that. Yeah, so, I mean, really the Dow Jones, yeah, it still is just floating with that level. The FTSE, however, is well above both its trend lines, and that could be considered to be in a short-term bullish formation, according to trendline theory, because it is technically, if you're going to look at it technically, it is above both of those lines. So anyway, I know it's a little bit tricky at the moment. It's not quite well defined, but hopefully with the 45-degree angle and looking at the longer-term trend lines above and below, that'll help you a little bit in the actual direction of those two. So what are the two charts that I've actually taken entry signals for my own personal trading? These two would involve CSL. So this is CSL Limited on the Australian market, and this is a weekly chart. Now, just looking at the longer-term downtrend line here, the market has closed above that downtrend line, but it's also closed above the previous two peaks. So that for me is a solid entry signal on a weekly chart. And in the back testing that I've done on this chart, it's given me around about a 90% accuracy, so a 90% win rate. Now, I know that is something that you would not expect to happen very often at all. In fact, usually you'd have 50 to 60 to 70% if you were very good. On this particular stock, it does seem to trend extremely well. So, yeah, again, in backtesting, have had a 90%, 91% pretty much success rate with this one. And if I just have a quick look, on CSL, in the backtesting as well, it won 3 times as much as it lost. So for every profit, it was 3 times as much as its loss. This is a great signal for me, and that's why I've taken it. Obviously, I wouldn't be risking more than 2% of my entire portfolio between my entry price and my stop, which I'd usually put below the previous trough. If I just draw a line for you here, and that would be around here. So that's a pretty simple way to enter the market, and it's basically just an excuse to get into the market and to sort of get trading, because you just never know until you actually bet money on it, and you don't want to see a trend disappear without you on it, of course. The second one, this is ASX, and exactly the same thing, from the high to the low. This is our downtrend line on a weekly chart, so it's a little bit of a longer time frame. It gives me a more solid signal. Just enlarging that a little bit, it has closed above its previous two peaks, as well as the downtrend line. So that would be my personal entry there. And looking at the exit, I'd be keeping that below the previous trough. So I know for some people that's a large amount of risk. That would be around $3 worth of risk. So for basically that's where the stop between the entry price and the stop loss is around $3. For some people, as I said, that may be too much, but for me personally, if you're looking at the longer time frames, or the medium term to longer term time frames, I think that's quite acceptable. So hopefully that's helped, guys. Sorry if I've rattled on a little bit, but I thought I'd give you as much stuff as I possibly could this week, and 2 extra charts as well, and hopefully the overall markets will decide which way they want to head, but it looks as though that individual stocks are still trying to steam ahead anyway. So again, thanks very much for stopping by. Please drop by the website if you feel so inclined. It's got a lot of free tools and a lot of free trading and investment course on there as well that I've done, and that's at asxmarketwatch.com. Other than that, hopefully I'll see you next week, and thanks very much. Bye now.